Alright, hey, what's up everyone? Scott here again with a brand new video, and for this one here, I'll be discussing and showing you guys here in thinkorswim 3 very simple yet effective tips that I learned over the years to dramatically increase the consistency and frequency of making profits with credit spread strategies. So specifically, that's going to be your put credit spreads and your call credit spreads, although of course, in some aspects, you can definitely apply iron condors to these tips as well. Now real quick though, before we dive in here, in case any of you would like to join a very exclusive online community where you guys can really learn how to successfully trade options, then you can now join my options trading Discord. And once you join, you'll gain access to the following great benefits. Number 1 here, you'll see detailed real-time trading updates from my personal live trading account. You'll also get daily trade suggestions and ideas, alerts regarding important market news, events, and price levels. You will also receive very fast and personalized responses to any and all of your questions. And of course also, you'll be able to participate in very engaging discussion with other like-minded traders and investors, myself included. And so if that sounds good to you, then be sure to sign up today using my link that you'll find in the description of this video, and you'll begin your 7-day free trial. And then secondly here, for any of you who are brand new to the channel, again, my name is Scott, and you can also find me on SKILLSHARE as well, where you can take my very detailed classes on options trading or stock market investing. And you'll also find some links to a few of my introductory courses in the description of this video as well. So be sure to check them out, and when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. And lastly here guys, be sure to watch until the end of the video, because at that point I've got a very cool limited time opportunity for you all where you can receive up to 10 free stocks, and each stock could be worth up to $2,500. Alright guys, so now diving in here, and for all 3 tips that I'll be discussing in this video, I'll be using SPY as my main example here. And so starting off here with tip number 1, and that is to use wider spreads. And specifically, in my opinion here, I do think at minimum, your spread should be at least $5 wide, or basically the difference between your long strike and your short strike of your credit spread should have a difference of at least $5. Now, why is this the case though? Well, if we come over to the trade tab real quick on SPY, and just for the sake of example, we'll go into the August monthly cycle, unfold that tab here, and we'll scroll down to the near at the money options. So for example, let's say I'm bullish on SPY, and therefore I want to sell a simple put credit spread here. And perhaps I choose the 375 strike put option as my short strike, and then the 374 strike as my long strike. So real quick, I'll go ahead and create this order here. So I'll right click on the 375 and go to sell and vertical. And here we go. This is our order to sell that credit spread in our example. As you can see, it's only a $1 wide spread, and the total credit we're going to receive for putting on this trade is about 32 bucks. Not too bad. Now the main issue with this spread though is that you will have almost no exposure to the option Greeks, specifically delta, theta, vega, and gamma as well. And specifically for delta, theta, and vega, these are the 3 main ways you can actually make money when you are using option selling approaches, like in this case credit spreads. And so as you can see here on the option chain, in this column we have the deltas of all these put contracts, the next column we have the theta values, and lastly we have the vega values. I did also mention gamma as well, but again the 3 most important ones are these 3 right here. And so I'm not going to go too in depth into what these things are. I do have a separate video that takes a deep dive into the option Greeks, but just to summarize here, delta here will show you how much the price of this contract will change for a $1 move in SPY. So for example, if SPY goes up by $1, then the price of this put option here will fall by about $38. And then theta here will show you how much the price of this contract will fall after each day passes, right? Because simply the passage of time slowly deteriorates the value of all option contracts. And then lastly here with vega, this shows you how much the price of this contract will change for a 1% move in implied volatility. And so bottom line here, the main issue with using a $1 wide spread like this is that the option Greek values on both contracts will basically totally cancel each other out, right? As you can see here, both the 375 put option and the 374 put option have the exact same vega values, the same theta values, and almost the same delta values. So basically what this means here is your credit spread is going to have no exposure whatsoever to implied volatility or time decay. And what little exposure it has to delta is almost 0. So ultimately, as SPY here moves around in price, and as time moves forward and you get closer and closer to expiration, and then also as implied volatility moves around, that's going to basically have no bearing or impact whatsoever on your credit spread. And as a result of that, you're going to be in this trade for a very, very long time. And of course, the longer you're in a position, the more time the stock has to move against you and for you to have losses. And so that's why my first tip here is when you are trading credit spreads to go at least $5 wide on your spread, if not more. Because now, as you can see with the 365 strike put option, for example, the delta is only 28, which is a full 10 points lower than the 375 strike put option at 38. And same thing also with the theta value as well as the vega values as well. They are both here a bit smaller than with the 375 strike put option. And consequently, with a spread that's $10 wide on SPY here, you're going to have more exposure to the full option Greek values. And ultimately, that's going to make for faster and much more consistent profits when you are correct on the trade. And lastly here, before moving on to tip number 2, is if you are going to go ahead and use wider spreads, just make sure your account can handle the increased amount of risk, right? Because obviously with using wider spreads, the max loss scenario is going to be much greater than using only a $1 wide spread. And generally speaking, my rule of thumb is not to risk more than 5% of my total account value for any one position. So again, if you want to use perhaps a $10 wide spread, but the max loss is maybe 10 or 15% of your account value, that's probably too wide of a spread. So therefore, your choices are either to decrease the width of that spread and simply accept a less sensitive position to the option Greeks, or you can of course deposit more funds into your account. So that there is tip number 1. Tip number 2 now is to use basic technical analysis, specifically support and resistance, to pick your entries a lot more carefully with your trades. So for example, let's now go back to the charts and take a look at what I have going on here with SPY. So again, my preferred approach of using technical analysis here is number 1, I do have some basic moving averages. Specifically, the one in yellow is the 200 period moving average. The one in blue is the 20 period moving average. And then all these white lines, which are the most important ones, these are all support and resistance levels. And specifically for support and resistance, using this form of technical analysis allows you to much more easily pinpoint certain zones or price levels where there's either going to be a lot of selling pressure or a lot of buying pressure. So for example, as you can see right here, for a time, this was acting as a major support level, right? You can see 1, 2, 3, 4, 5 different cases where SPY came down and touched that point, perhaps briefly punched through it, but ultimately there was a lot of buying pressure around this price level, which of course caused SPY to bounce off that level. So bottom line, it would be during these points where selling perhaps a put credit spread would be a good trade. And then conversely, what about this zone right here? As you can see, there were 1, 2, 3, 4, 5, 6, 7, 8 different attempts by SPY to get above this price level. So all through this time, this was acting as a major resistance point. So naturally, of course, every time SPY got to this level, this would be a good opportunity to sell a call credit spread and play for a downside reversal. Now, of course, also, these support and resistance points do not always hold indefinitely. At some point, they will break, as you can see very clearly right here. SPY once again came down to that support level, but this time it broke and finally went lower. So ultimately here, the point of using technical analysis, support and resistance is not to be correct on your trades every single time. That's impossible. The point though is to find areas on your charts where the chance of being correct is much higher than perhaps 50-50. Right, trading in general is simply a game of chance. There are no certainties in this profession, but there are always odds or probabilities associated with any given trade that you make. So again, your job as the trader is to find potential trade setups such that the odds are put in your favor of making a profit. So even though in this case, if you placed a put credit spread trade once SPY came down to this point, perhaps you would have lost money on that trade, but now going forward, there's a pretty good chance that this former support level is now going to be flipped into resistance. So therefore, if SPY came back up and touched that point, got back up to that level, chances are SPY is going to be repelled off it. And obviously, as you can see here, that's exactly what happened. And that's pretty much how basic support and resistance actually works. Again, during this time, there was a lot of buying pressure on SPY if it got down to this price level, right? Perhaps given the current market circumstances of this time, the general market consensus was at this price, SPY is basically at a discount, but of course, circumstances change all the time in the market. So then fast forwarding over here, those circumstances obviously changed and no longer was SPY at this price level a discount. The market now deemed SPY at this price to still be too expensive. So therefore SPY broke through this point and now this line flipped from support into resistance. And so once you spend some time learning and practicing this kind of technical analysis, because it does take some time to master, but once you do and you incorporate it into your trading, you should see some nice improvement in your profitability. So that's tip number 2. And then lastly here with tip number 3 is to take your profits early. Right, specifically, in my opinion, you should not be holding these trades all the way to expiration to make the maximum possible profit. So for example, if we come back to the trade tab again on SPY and take a look again at our put credit spread, and also let me go ahead and change the strikes here. So for example, if I were to make this trade, as I explained, I obviously would not make this a $1 wide spread. I'd probably make it at least a $10 wide spread. So that means the long strike here will be at least 365. So now if I were to go ahead and make this trade, my initial credit would be right around 260 bucks. And the only way to make this full amount of profit is to hold this entire trade all the way to the August 19th expiration date, which is still, as you can see here, 43 days in the future. And that obviously is a very long time to wait just to make the full profit here. Right? Because as I mentioned, the whole point of trading is to find trade setups and to use trade management techniques to put the odds in your favor. And along with using technical analysis, another way you can achieve this is by taking your profits early, right? Especially when you consider the fact that, let's say perhaps maybe a week goes by and I'm already up by 50% on this trade. Is it really worth waiting another 5 or 6 weeks just to make the last 50%? In my opinion, I don't think it's worth the risk. So mainly because with option selling strategies, you always have a limited or a capped profit potential, then again, in my opinion, it does not make sense to hold the trade all the way to the expiration date if perhaps early on in the trade, you've already made most of the maximum profit, right? So in those cases, you may as well go ahead and take the trade off and book your profits and therefore eliminate the possibility of the stock moving against your trade and taking all those profits back. So focusing back on the example trade here, again, if I sell this spread for about 260 bucks, then for me at least, I pretty much always take my profits at 50% of the maximum. So therefore, if we assume here that I already went ahead and made this trade, and now if I were to flip this order to a buying order or a closing order, in which case I simply have to flip which options I'm buying and selling, right? So there we go. Now in this case, with my closing order, I'm going to buy back my 375 short put option and then sell the 365 long put option, right? And for this closing order, I would set the price to be exactly half of my starting credit, which in this case would be about 130. So if and when this put credit spread falls down to this price, this buying order would get triggered and I would automatically get pulled out of the trade and book my profits. And then of course also, I would make this a GTC order, so this one is always in place and would not expire at the end of each day. So bottom line here is by taking your profits earlier, you are going to boost or increase your overall win rate. And then of course, when you combine this with using wider spreads, so you have greater exposure to the full option Greeks, and also using technical analysis to better pick your trade entries, all these things together are going to increase your win rate dramatically as well. And so there you have it. Those are my 3 tips for more consistent and more frequent profits with using credit spread strategies. And then lastly in this video, as I said, I do have a very cool limited time opportunity for you all where you can receive up to 10 free stocks. So basically there is a newer brokerage company out there called Moomoo, which is based in Palo Alto, California. And again, for a limited time, they are offering you the opportunity to receive up to 10 free stocks when you sign up for a brokerage account with them using my link in the description of this video. And so the Moomoo trading platform is highly competitive with other comparable platforms like Webull and Robinhood. There are absolutely no trading fees on stock or option trades. You also get direct trading access to US, Hong Kong, and Chinese markets, which is something I have not seen being offered by competing platforms. Moomoo also comes with a free, very advanced, yet totally user-friendly trading platform that you can install on your computer or your smartphone. And of course, everything is regulated by the SEC and FINRA, so your investments and your trades are properly insured. And so if that sounds good to you, then again, use my link in the description of this video to sign up and get your free stocks. And also don't forget to check out and sign up for my options trading Discord as well as my Skillshare courses. Links also in the description of this video. And finally here, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week and you don't want to miss out. So thanks again for watching, and I'll see you next time.